All right, here's our special offering, quarter se quarter tak. Nigel will join in to tell us about what he's expecting from the steel sector. He's walked over to the big wall. Nigel, over to you.
Well, in the upcoming steel results, there are three key factors to focus on. One is strong volumes, lower steel prices, as well as higher coking coal costs. Let's elaborate on each of them in a little greater detail. Shipments of major ferrous players are expected to increase year on year, driven by growing steel consumption. Tata Steel India, well, the dispatches are 18% higher on a year-on-year basis, led by domestic deliveries, while exports remained a little bit subdued. Now, JSW Steel's India operation production also jumped by close to 10% on a year-on-year basis. Realizations, though, will limit the top-line growth, as prices will be lower by around 1,500 to around 2,000 rupees per ton, sequentially that is, and around 15% lower on a year-on-year basis. This is due to the sharp rise in steel exports coming out of China and the weak global steel demand as well. That's what's put some pressure on global steel prices and reflected on domestic prices as well. Now, coking coal prices, they have corrected sharply, but costs could increase by around $5 to around $20 per ton, depending on the kind of inventory that the steelmaker is carrying. Running you through a quick snapshot of the expected EBITDA per ton as per ICICI Securities, Tata Steel India EBITDA will come in lower by more than 40% on a year-on-year basis, while its European operations will continue to report a negative number on the EBITDA per ton basis. As the volumes were lower over there in the European business, that's because of the shutdown in the past quarter. JSW Steel, well, the EBITDA per ton could correct by around 27% on a quarter-to-quarter basis, while sale EBITDA per ton could come in lower by around 50%, both sequentially as well as on a year-to-year basis. They've also given the key stocks to track for their upcoming results season. From the metal space, well, on JSPL, they expect the best performance among major steel players, with the reported EBITDA per ton likely to remain flattish sequentially compared to a decline for the other players. For JSL Stainless, they're expecting the EBITDA per ton in excess of 20,000 rupees. And for NALCO, they expect the company to perform better than Hindalco, mainly due to the captive mining at the Utkal D coal block. Going ahead, the street is tilting towards ferrous in comparison to non-ferrous, as ferrous players could benefit from the improving spot spreads and also stronger traction in the domestic market. While on non-ferrous, well, the stocks could be under pressure due to market surplus in key commodities caused by subdued global demand. The key factors to track from here on, though, include domestic demand, management commentary on spreads, and let's wind this down then with a quick snapshot on the valuation parameter of the key ferrous players as well. But let's get in Amit Dixit then. I think he'll join us in just a bit. So, Sonia, back to you.
All right. Thanks a lot for that. So that's what you can expect from the steel companies. As Nigel pointed out, we'll just get touch base with Amit Dixit in a bit. But the stock of the moment is actually the new listing. In case you missed out on it, Utkarsh Small Finance Bank is having a rocking time. It's not a small move, 60% higher almost in volumes, picking up on that one. So day one is turning out to be pretty strong for Utkarsh Small Finance Bank. Apart from that, you have Piramal Pharma. Remember, Sanjeev Bhasin was also talking about that. Piramal Pharma up almost about 4%. But let's try and connect with Amit Dixit, the analyst at ICICI Securities, to tell us what he's expecting from the metal sector. Amit, thanks a lot for joining in. You just heard, Nigel put out the key expectations. But you tell us, from the universe that you cover, could there be any positive surprises this time around? Where do you see caution as well?
Yeah. Good morning, Sonia. So this particular quarter is a very atypical quarter, I would say. Previously, we have been accustomed to seeing steel companies reporting a very, very, similar, I would say, decline in realization or increase in costs. However, this quarter is a little different because based on the inventory that companies are carrying, you would see a differentiated performance. So to that extent, for instance, in steel, EBITDA per ton, we expect it would be down QOQ to the extent of 3,000 rupees on an average. However, JSPL would be an exception, where EBITDA per ton is likely to remain flat, adjusting for the inventory revaluation that they did in last quarter. So that is mainly because of the thermal coal cost that is lower for them, and that doesn't apply to other steel companies. Second point, as far as the realization goes, we expect Tata Steel to actually report a little bit of an increase in realization, that is around to the extent of 500 rupees a ton, mainly because of the contracts. So, and in iron ore, similarly, we expect JSPL, for instance, to report lower iron ore cost compared to last quarter, while some other companies such as JSW Steel are likely to report higher. Now, having said that, if you look at the from the pack, we believe that there are certain companies that would still show differentiated performance. The one, Jindal Stainless. So we will see that the record EBITDA that the company did in the last quarter, there would be only a slight dip QOQ, mainly led by steady realizations, and EBITDA per ton would be around 20,000 rupees, in excess of 20,000 rupees, I would say. Nalco, another stock to watch out for, where the start of captive mining would help them in controlling costs despite lower aluminium prices. So these are the two stocks that we would see performing well. Apart from that, Shyam Metallics, of course, because of the capacities that have come on board. So because of higher capacities, the volume would be up, and that would offset some of the decline that you would see in realization. Notwithstanding that, the company would also get advantage of lower thermal coal cost.
Okay, hi Amit. Good morning. Thanks so much for joining in. Amit, JSW Steel, after many quarters or many years, we're going to be getting the numbers at around noon today. They're in Tokyo, so that's why the management will be declaring the numbers out then. We have the expectations, but I just want to ask you, there were some reports a few days ago that suggested they're looking at that Canadian coal mine, which will help them in backward integration, but the valuation looked very large. How would you approach it if they're going to be raising $2 billion, to buy that 20% stake or thereabouts? Won't it further put pressure on their balance sheet?
Yeah, so we would get clarity on the con call regarding that particular potential transaction. At this point in time, I would say that the valuations that are doing rounds are steep. But the company wants to get hold of captive coking coal. The reason being that coking coal prices have been very volatile in the past. That said, balance sheet already on leverage, they are probably the highest on the street. However, we would like to hear more on the con call regarding the thought process behind this transaction and the value that they see actually getting unlocked.
And the report was indicating that earlier, the valuation that was being discussed is $22 billion. So that is going to be a very large number. Even if they have to buy 20%, it'll come to around $3 to $4 billion. That will be too huge, right? What number will disappoint you actually? Either in terms of the quantum that they are buying or the total money they're putting on the table?
No. So currently, well, we don't have a great deal of details on the reserves, on the kind of plan that they have. So potentially, even 3 to 4 billion dollars would look cheap in context of the reserves that they have in store. However, on the face of it, I do agree that this seems to be a steep valuation, but we would like to get more on the drivers of this transaction from them in the con call today.
All right, Amit, we leave it at that. Thanks a lot for joining in, and pleasure speaking with you. That's what you can expect this quarter.